This is a very powerful beginner-friendly trading strategy that allows you to trade with the trend and also allows you to catch those big pumps before they happen, just like the long trade you see right here. So make sure to like the video, make sure to subscribe to the channel. We are telling you what is going to happen in these markets before they happen, and you do not want to miss these updates. I opened up a $500,000 long trade from the exact bottom. I let everybody know where I was looking for the rejection, giving the short trade, and bam, putting my money where my mouth is, giving the warning, giving the level, and taking the trade right here. You do not want to miss these updates, so make sure to like, subscribe, click the bell for notifications. Let's get into this trading strategy. This is a classic strategy, one I used big time in the last cryptocurrency bull market. Also works very well in bear markets for shorting, and this is the Market Cipher 4-hour 24-minute trading strategy. Now, what is the 4-hour, 24-minute trading strategy? Essentially, it means this, and then I'm going to break it down for you. We're going to be using two time frames, the 4-hour time frame and the 24-minute time frame. Why the 24-minute time frame, Jason? Why not the 20-minute? Why not the 10-minute? Why not the 25-minute? Guys, I've been backtesting this for many years, and let me just tell you that the 24-minute is the time frame you want to use because it will give you better entries. Why? I don't know, and I don't care. All I care about is making those juicy profits. Now, this strategy does require an indicator called Market Cipher. There is a link in the description of this video. If you want, you can use my affiliate link, which gives me commission, or you don't have to use my affiliate link and you can go to someone else. I don't care if you use my affiliate link or not, because personally, I've been trading with Market Cipher since before I was making YouTube content. It's just the way I trade. I'm not here to show the indicator, so I don't care if you use my affiliate link or not. So here is the deal, all right? When we are looking for long trades, we want to first see a trigger wave on the 4-hour time frame. So step number one is a 4-hour trigger wave. We're going to get into exactly what a trigger wave is. Step number two is going to be a 24-minute trigger wave or money flow cross. All right, this is going to be the way we get into all trades here. So first, let's talk about what is a trigger wave. On Market Cipher B, there are two types of waves. There are anchor waves and trigger waves. An anchor wave is a nice deep momentum wave that usually goes down below this -60 line right here. And it's even juicier if it has some of these Big Ben BitBoy green dots, all right? We don't really need to have those Big Ben green dots, but those actually make it more of a powerful signal. Now, a trigger wave is continuation, all right? A continuation wave. And what we want to see on the continuation wave is we want to see, number one, the momentum wave getting higher as the price is also getting higher, showing us a continuation of momentum. But a very powerful thing here is the money flow. Is the money flow also getting higher as that momentum wave is getting higher? So you can see here, this purple stuff, this is the money flow, right? So as we see a nice anchor wave forming here, and then we see a trigger wave forming right here, we want to ask ourselves, is the money flow getting higher? If the answer is yes, then this is exactly what we want to see. If the answer is no, you could still take a trade, but the probabilities are not as good in your favor that it is going to play out. Once we see this 4-hour trigger wave printing, then we head over to our 24-minute time frame. Now, what you can do is you can actually double-click Market Cipher B, add an alert on Market Cipher B. The condition is on Market Cipher B, when the blue wave is crossing up a small green dot on the 4-hour time frame, all right, only once really means as soon as that thing starts to print, it alerts you. I recommend doing only once, right? Then you don't have to look at the chart all day. You can just wait for the alert, and then you can look and see if things look good, you know, to actually enter into that trade. Once you see that trigger wave forming, then you're going to head on over to the 24-minute time frame. All right, so we're going to go ahead and put a vertical line right here. All right, and we're going to head on over to our 24-minute time frame. Aha, yeah, so here we are. Now what we're going to do on the 24-minute is we're going to wait for either a green dot to print or we are going to look for a money flow cross. Okay, so what happens first? That 4-hour green dot prints and we see a money flow cross actually happen right here. Now, ideally, you don't want to see the money flow crossing when the 24-minute is giving you a red dot. Ideally, you'd want to see the money flow crossing as it's giving you one of these trigger waves. So in this instance, personally, I would wait for this trigger wave to print right here. As soon as that trigger wave prints, this is now going to be your entry for the trade, okay? Now, let's talk about where the stop loss goes. For these trades, the stop loss needs to go under the last swing low. So in this instance, right here, I would put my stop loss entering right here on this green trigger wave. I would put my stop loss underneath the last swing low. That's about a 1.4% stop loss. And then honestly, with these trades, I like to shoot for at least a 2-to-1 risk reward ratio. Really, the best way to do it, guys, is just support and resistance, right? Like a good target for the trade would be right here where we saw this area of resistance. So that right here is almost a 3-to-1 risk reward ratio. That's a really good trade setup where we have our stop loss, our point of invalidation, where the idea is wrong if we come and make a new swing low, and we have our target, which is just historic resistance right here. It looks like a high volume node. This is how we want to set up our trades, right? Stop loss below the last swing low, target, support resistance flip, shoot for at least a 2-to-1 risk reward, right? We never want to be shooting for like a 1-to-1 risk reward or something like this, because if we are, then our losses and our wins are just going to break us even every single time. And if we take more losses than wins, we're going to lose money, right? You want to shoot for at least a 2 or a 3-to-1, because if you're making 3 times more profit than loss every trade you take, you could lose 3 trades in a row, and on that 4th win, you're basically at a break even, right? You could have like a 75% loss rate and still break even shooting for those 3-to-1 risk reward ratios. Now, if the money flow on the 4-hour is continuing to get thicker over time, as it is right here, then we have another opportunity to get into a 4-hour, 24-minute trade. Now, I never like to take these trades when the green dot on the 4-hour is printing above this overbought territory, right? If it's above the 60 line, low tove, not good, all right? We want it to be not oversold, because oversold means, we need to cool down a little bit. So this one right here, as the money flow is getting thicker, this is another valid entry. So boom, we put our vertical line right here, and let's check out how that would have played out on our 24-minute time frame. So let's zoom in. It's the trade I showed you at the beginning of the video. As we print this 4-hour green dot, the 4-hour dot begins to print right around here. And then as this 24-minute green dot actually confirms right here, I mean, would you look at that, guys? Literally, as it confirms, right? That means the candle closes. This little green doji candle closes. Typically, I don't wait for the candle to close on the 24-minute. I just go for it. But let's say you wait for the candle close. We put our stop loss below the swing low, and we shoot for our next area of resistance here, which is going to be this. It's a beautiful 3.25-to-1 risk-reward ratio, a beautiful take-profit one right here. And, what I like to do a lot of times is if you hit a 3-to-1 risk-reward, take out 50% of the trade. You already made more than 1.5% on your account. If you're risking 1% with a 0.6% stop, then you can let the rest ride to see how far it can go. Honestly, the 24-minute looks pretty good right now. Money flow is about to cross to the upside. Makes me think we can get another push up. So this is the strategy, guys. It's a really good one. It works really well. I encourage you to go and back test it. It also works for shorting. So let's kind of see what we got. We get this high up here, right? We get this nice high right here. This is actually a bearish divergence. And this is a bonus, guys. If you don't know what a divergence is, stick around the channel. Make sure to subscribe. But if you see a divergence first, then any other signal you get for these types of trades are much more powerful, right? So we got a divergence right here. Basically, price made a higher high, momentum made a lower high. Very powerful short signal. And then the next opportunity that we get for that trigger wave is right over here, okay? So let's check out the short trade that we could have taken right over there. All right, so the 4-hour dot prints right here. So we got that vertical line right over here. It's basically when that dot starts to print. All right. And then the money flow cross on the 24-minute happens right here. All right, so we could enter right here, or we could wait for a trigger wave. So our 2 entries would have either been right here or right here. It really makes no difference because in both of these instances, our stop loss goes above the swing high. So whether we're entering at that first entry or the second entry, we enter here, stop loss above the swing high. And then what do we shoot for? We shoot for support. And honestly, support is coming down at the low of this range right here. So we would shoot all the way down to here, which we hit very perfectly. A beautiful 3-to-1 risk-reward ratio right there. If we are risking 1%, we just made 3% on the account. And again, you could take out half or 75% and let the rest ride. But you can see here, guys, basically, these are the last 3 trades we could have taken using this strategy. And all of them are absolutely beautiful. Actually, no, there's trades even before that. Let's check this out. What happened over here? What happened over here? Did we get anything here? Nah, we didn't really, okay? We didn't really. You might be able to say that this was an anchor then a trigger, but I wouldn't consider that, all right? So yeah, 3 clear entries here, and maybe 1 unclear entry, but all of them very, very nice trades based on just this strategy and support and resistance. So go and backtest this for yourself. It's great for trading with the trend, right? You could see that, you know, that divergence on the 4-hour, in my opinion, kicked off a little bit of a downtrend here. But yeah, that money flow is king. Go backtest this. Let me know what you think in the comments down below. Make sure to like, subscribe, click the bell. May God bless all of you in the name of Jesus, Yeshua, the Messiah. Even if you are not religious, I still pray you and your family are super blessed. I hope you enjoyed the video. Peace!